Alright, welcome to our weekly update on the Australian property market, where we discuss waves, impulsive waves and corrective waves around Australia. I had to take a short break from running this channel as I had to dig out of a trench that the stock market fell into. Now that I'm back on track, I can continue on with this additional challenge of figuring out where we are sitting in the property market cycle. And we are nearing the end of it. The forecast for this week, according to SQM, is Sydney flat, Melbourne down, Brisbane down. So why are we here? Because interest rates are up for the 12th time, and we want to know whether there is more rises to come, how US bonds are going to affect property prices and the broader economy. So far we have only discussed the East Coast, trying to figure out whether we have started wave 5 within the broader wave 3. At this stage I can only tell that the suburb of Bondi has finished wave 3 within the broader wave 3 in the last 5th wave. So let me show you how it performed over the last 5 decades. Here is wave 1, wave 2. The third wave ended with the banking crisis of 2008, which resulted in a wave 4. Now we're in the middle of wave 5. Now that I've looked at all the states around Australia, I need to make an important update to my long-term chart, as I believe our wave 3 didn't end in 2008 like it did in Ireland. It seemed like we managed to pump it up for another 6 years with the stimulus from the government and the infamous $900 checks. So in most postcodes, it ended up around 2014. Except for Western Australia, where it ended in many cases later in 2020 and 21. So here we are, facing the final act of this spectacle that everybody seems to be engaged in and making money off, from banks through to real estate agents and conveyancers. And who is paying for it all? Renters and those poor bastards who enter the market last and end up holding the bag. Our interest rates are correlated with the 10-year US bond yields that are having a bull run, which actually is a bull trap, as they won't go past the last high of 4.335%. They need to undergo another drop in order to complete wave 4. That will correlate with the incoming spikes in stocks and gold, and potentially our property market. In my opinion, the next few weeks will give us some spectacular increases in all sorts of assets as the US bond yields complete wave 4. There is a chance we can finish off wave 3 in most suburbs. Having said that, once US bonds start a new wave 5, that's where we should expect another rise in interest rates, maybe 2. It will tank stock markets and cause further drops in house prices in Australia. It will complete wave 4 in many postcodes. It's going to be painful to watch, and we are getting pretty close to the event. Maybe it will start by eventually after the big falls. As we are tinkering on the brink of a recession, central banks are going to announce a drop in interest rates all around the Western world. We just need to wait for the 10-year bond yields to reverse. Once they go into a full swing correction, you should see a reversal in the broader property market and the beginning of the final upward wave within the larger 5th wave that would end up the big cycle. In order to see particular waves, we must take a more granular look at the individual suburbs, as if taking a magnifying glass to analyze a photograph pixel by pixel. For that, we switch to the SQM website. As the research gets updated every week, I'm going to regularly post updated prices. So make sure you like this video and subscribe to the channel, as I've got more good stuff prepared for you. Okay, here it is. Perth suburbs of Fremantle, 6160. The chart starts at the beginning of 2010, right at the beginning of the bigger wave 4 that lasted until October 2016. It was followed by an upswing wave 1, which started the final 5th wave in the big cycle. The first wave ended here at the outset of the pandemic. After 8 months of a correction, we started a wave 3, which usually is the most potent out of all of the waves. it's still going on, and I don't expect it to end this month. I'm guessing the incoming crash in the stock market associated with the first wave in the US bond yields is going to tank the suburb and cause a correction into wave 4, where we are going to retest the $1 million mark, but it won't go below 703,000. After that, we are going to start a new fifth wave that will conclude the third larger wave within the final fifth wave. Be mindful that all postcodes run at different speeds and different time frames. As Perth started the final fifth wave years after the East Coast, it's going to play a catch-up game, which means huge gains over the next months and years. Whether it's going to extend gains after the East Coast finishes its cycle, it remains to be seen. It depends on a triggering factor. If it's a bank liquidity or a mass die-off, then all markets should be affected simultaneously. But we still have a couple of years to discuss it. As usual, apartments seem to be behind in the cycle. The first wave started here with a 58 months lag comparing to houses. I would argue it hasn't finished yet. There are more spikes within wave 1. There's a long way up for units in this part of town, as the big wave 5 just started. It seems that life is better on the other side of the continent, where you have beautiful beaches, smaller migration and cheaper houses. Perth seems to be playing a catch-up. Perhaps it's time to move.